Okay, traders, it's time for another episode of Risk Rules. To get a complete list of the risk rules, go to my website, microstrader.com. Click the hamburger menu at the top, click Risk Rules, and it will take you to the webpage that lists out most of the risk rules. Risk is the only thing you control. As I create these videos, I will continue to build out that page. So let's talk about the risk rules we've already discussed. The first one was know when not to trade. The next is knowing your max trade loss. How much are you willing to lose per trade? And what's the max loss for the day before you say, I'm done? And today we're going to discuss the super important topic that blows up more accounts than anything else, is never add to a loser. Okay, let's get to it. Before we're done, this whole screen is going to be full of information. It is quite involved. It's taken me several days to put this together, so I hope you find it valuable. So for today's exercise, we're going to pretend that you took a short right here for whatever reason. For our group, it would be because it's a bounce level. This is 6 points from your hard exit. Then I have a backup level right here, 4 points. Then I have a different backup level here within 2 points to help fill out our examples. Because although the risk rule is do not add to a losing trade, there is a section that we can add to our trade, and that is under the hard exit. Okay, and we're going to talk about that. Where do you not want to add? I don't want you to add above the hard exit. This is adding to a loser, and we're going to discuss all of this. So let's talk about the profitable trader. So the profitable trader manages losses within this region. They manage their entries within this region, and we're going to discuss that. And then, of course, below your entry on a short, you're now managing your profits down here. And that's what you do. This is your job. Mainly this, and then hopefully that. If you have a high probability system, hopefully you're managing profits more than you're managing your losses. But both are absolutely vital. And what's even more vital is the fact that you do not add to your position up here, making your losses worse further away from your entry. So what resides up there? Doom. That's what resides up there, is doom. This is where traders go to die. The charts are littered with traders' bodies who decide to stay in their trade past their hard exit, who decide to add to their trade beyond their hard exit. It's littered with their bones and their dead accounts. One thing to note, a failed trade does not equal a failed trader. If you have a high probability system and you need it, you can take this acceptable loss that just makes you go, oh, well, no big deal. It happens. The size of this loss needs to be where you go, oh, well, whatever, no big deal. There's another high probability trade around the corner. If this loss size causes you to freak out in any way, it's too big. You don't need to be taking that trade with that amount of leverage with the stop that far away. So what you need to know is that up here is the graveyard of traders. These are unacceptable losses. You should be fired from being a trader. You must submit and surrender and plan for this happening and not allowing anything up here to happen. This is a no trade region for you. You're out. You're waiting for your next high probability trade. If you knew that you had a system where 92% of your trades were profitable, don't you think you'd have the confidence to just get out of this trade? Just get out. Wait for the next entry. It's no big deal. It is absolutely no big deal. Just get out. Okay? So this is where we want to live. We're going to manage our entries here. We're going to manage our profits down here. And when it gets to our line, we're simply out. This is the red line in your car. You don't want to blow your engine. You don't want to blow your account. This is like putting a limiter on your audio saying, I don't want frequencies above or below this because it is unpleasant to the ears. Well, I'm going to tell you right now, trading up here is unpleasant to your mental and physical and account health. This is not good for you. Just stop it. Get out. We do not add to a losing trade. A week or two ago, I made a YouTube video where I just repeated over and over, I will not add to a losing trade. I will not add to a losing trade. I will not add to a losing trade. I encourage you to repeat that, remember it. I certainly repeat it inside of my mind. I sure do. Okay, so let's get rid of these two. Let's get more into the nitty-gritty here. So, we're going to talk about this first. We want to use a risk-first approach. This goes back to reviewing our first risk rules we've talked about. Risk rule number 1 is, should I be trading? When should you not be trading? And then the converse of that is, should I be trading? You've got to be able to answer that question. Next one is, what are the high time frames telling you? Where are you? Are we laddering up? Are we laddering down? Are we in chop? Are we headed to a high time frame inefficiency on the chart? Where are we headed? The main thing, though, is you need to know, where are you? Next thing is, have you decided your max loss? But this was risk rule number 2, your max loss per trade and your max loss per day. We need all of this information to even be trading. We need this information to even be trading, okay? Must have that. Next thing. In our Core Strategy Academy, in our boot camp, I encourage my traders to hand draw 3 to 5 perfect setups. I want that diagram drawn. If we were at Chili's and I handed you a piece of paper and I said, draw for me your ideal entry, I want you to be able to draw it, because if you can draw it, you can own it. And then does the picture that I drew or the picture that I screenshotted, does that picture match the candlesticks on my chart? If they match, I probably have an entry. If they don't match, why am I entering? So I want you to have 3 to 5 setups that you can reference. Does the chart match the diagram you drew? Okay. Next decision. We need all 4 P. We need all of this information right here. What is our trend? Are we with the trend? WTT with the trend? Are we counter or are we chop? And the reason why I want to know that information is because I will allow a different max loss based off trend. Okay, so I have my daily loss, and how am I going to divide that up? Well, if I'm with the trend, I'm willing to use up more of that daily loss because I want to trade bigger, because I have statistics that show that when I determine we are with the trend, I have a super high win rate. So therefore, let's leverage that a little better. Next thing, you have got to be able to discern. You've got to discern, where is my ideal stop loss? Where is that? In our core strategy, we know exactly where that is, and you need to know where that is, calculate the distance, and know how far that is, because all of that information is going to go into our leverage matrix. If you haven't watched my leverage metrics video or downloaded the Google Sheet, go to my website, microstrader.com. In the upper right is a little hamburger menu. Scroll down till you see leverage matrix. The video and the Google Sheet is there on that page. My gift to you from trader to trader. So we need this information, because this will tell me how many contracts I can trade, given trend and given the stop loss and given the max amount I'm willing to lose based off that trend. Beautiful. We're getting somewhere. Next thing is, what type of entry do we want to do? This is important. Do we do it as a single entry? Do we do a test entry? Do we spread out our orders across the range? Is there multiple bounce levels? I demand for our core strategy there to be at least one bounce level between my entry and my exit. I want to give the trade an opportunity. Let's say price went past my entry level, but if I got a backup level, is that where it's going to bounce? It's going to bounce off this level. It's going to bounce off this level. I want to have at least one backup level between my entry and my exit. Preferably two. Preferably some high time frame bounce levels on top of it. So now let's discuss the entry possibilities. So 5 entry decisions in my opinion. Are you just going to do a full, all of your entries at your first bounce level? So let's say the leverage metric said I could do 4 entries. Am I going to put all 4 right here? That's one option. And if you do all 4 right here, price just rips through. Sorry, I should have used an arrow. Rips through and hits your stop loss. Well, that's 4 contracts at 6 points at $5 a point. We're using MES here. That's $120 full stop loss. That's the amount you've decided max. I can take that. No big deal. Oh, well, let me get back in the game. Let me reanalyze the chart. Where's my next trade? $120 max loss, no big deal. You might be a big dog where you're doing ESs and $1,200 is no big deal. Okay. It doesn't matter. Just know your numbers. That's one way to enter, is putting all 4 contracts here at your entry. Or you could decide, hey, I'm going to use the 4 contracts, but I'm going to dial down my entries. In other words, I'm going to put 1 at the 6 points, 1 at the 4 points, 1 at the 2 points, and 1 at the 1 point. Now, if price rips all the way through the levels and hits this, I sustained half loss. Because 1 was at 6, 1 was at 4, 1 was at 2, and 1 was at 1. Okay? That's pretty nice. I could take half a loss. Well, what if I just traded the wings? What if I only traded the wings, where I did an entry here with 1 and I did 3 up here? Okay? Entering on the edges of your range. Entering on the edges of your range. That's why it's called the wings. If I did that, well, 1 contract experienced a 6-point loss and 3 of them experienced a 1-point loss. That's a quarter loss. But then I still got in all my entries. Pretty cool. I prefer spreading out my orders or using the wings. I don't like entering all my leverage right on my initial bounce level. That's just me. I tend to play risk first, and that's how I roll. Now, the other way to do that is, let's say price comes to your level, gets you into your 1 contract and bounces. Awesome. Now my goal is to add contracts further down to get to my 4. Very cool. Not a problem. You could also do a test entry here. It comes up. You do your butterfly. You enter at the edges. You enter at the wings. Your break even is going to be really low here. And as soon as it crosses, I'm going to manage at that break even. And that's going to be my new quote unquote entry level. Okay. So there's a number of ways here to manage your 4 contract entry. All 4 here, or we do 1, 1, 1, 1, or we do the wings like this. Or if we come here, it touches and bounces, we add to our winners. I much prefer adding to my winners than I do adding to my losers. Okay, which is one reason I favor the wings. I do a test entry here. I'm expecting a touch and bounce, but if it comes up, I'm willing to add at the edge of the range. Those contracts have the least risk. I like that. I like that a lot. Okay. Next thing we got to decide. First of all, it's good for me to tell you I manage for touch and goes. Okay. So everything I'm about to discuss here, I manage because I want price to touch my level and go. I don't want it to go through my level. So we're going to talk about full loss, hard stop, don't make things worse. So if price just rips through, you need to have your stop up here and you just get out and go, oh, well, I miscalculated something. Some news event may be happening, anything like that. Who knows? The next thing is could I possibly get out at a half loss? What would that look like? Well, let's say price came up it did bounce off this level. It didn't make it back down to give me the gift of a break entry and started going back up. I'm going to get out. Why? We're now laddering the wrong direction. So I am not afraid to take a half loss. No problem. What about a paper cut loss? Well, price comes up, it comes back, it does this stuff. I'm just out. I'll take a paper cut loss. No problem. No problem at all. What if price just rips through this, comes back to break even, and gives me the gift of a break even trade? I'll take that too. No problem. I don't mind taking a break even. I have a high probability trade right around the corner. And when do you just get out? Whenever you're tired of watching the trade, whenever it's just not doing what you paid it to do, whenever you start hoping that price comes back, you just get out. Who cares? There's another high probability trade right around the corner. Price either bounced or it didn't. Okay. Now, the extra juice here is adding to your winners, okay? That's really important because I typically like to enter with the wings. A lot of times price will hit my level and bounce and go that direction. And now I'm trying to be in the business of adding to my winners, and adding to your winners will really juice your returns. Adding to losers will not. It works sometimes, and then when it doesn't work, it hurts so bad, which is one reason, just to bring this chart back up, I like these different entries. I'm typically not entering my full contracts. Will I? Yes. It's got to be the most perfect setup, and I got to do all my contracts here. Okay, that happens very rarely, where all the stars are in alignment. I prefer either spreading out my orders or trading the wings or just doing a one contract. And if it bounces my direction, I plan on adding to my position once I receive confirmation that it actually bounced and we are moving and laddering in the direction that makes me profit. So at the end of the day, when it's all said and done, the disciplined trader is going to live down here. This is where traders go to die. Don't do it. Manage your risk. Manage your entries. Know your max loss that you can stomach. Have a high probability system so you have the confidence to get out. Oh, well, that didn't work. There's another trade around the corner. Please make sure you go watch my Risk Rule 1, When Not to Trade. I published a video yesterday about high time frame analysis. I did Risk Rule 2, the trade, what's your maximum loss per trade and your maximum loss per day. And this is Risk Rule 3, do not add to a losing trade. But you should do the converse of that, which is add to winning trades. Think about this for a second. If you look at your trading career and you never added to a loser and you always added to your winners, would you be in a much better position today? I'm going to say yes, you would probably be in a much better position today if you never added to a loser and you only added to your winners. But you know what? The trader within us, the gambler that lives within you, wants to add when you're down, because now price only has to come back half the distance and I can get out. Well, that works until it doesn't and it destroys you. That is dynamite. We don't play with that. Don't redline your car. Just get out of the trade. All right. I hope that you found this information useful. If you like this type of information and you believe this could help your trading, please check us out at microstrader.com. Have a great day.